Hey traders, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys hit the like button and subscribe. And in this video, I'm going to go over how to handle a bear market. What should you do? What are ways to kind of alleviate any of the stress or the fears that you have of a bear market? So the first thing is draw trend lines, right? If you guys watch my videos, I tell you guys, I've been saying this for a long time, probably since the start of the year, that what the market structure has changed. We are now in a bear market. Why? Just simple basics, right? Just drawing a trend line. We're on the other side of the trend line. And throughout the year, I told you we kept touching this 50 over and over and over. Kept falsing, kind of faking out, and now we fell on a big, powerful move. We bounced right back to it, and it's failing again, right? So how do you handle this? Well, have a plan. Understand what to do, right? If you are long this market, are you in it for 5 years, 10 years? Or are you in it for 3 months, right? If you got long here, and you kind of were like, hey, I think we're going higher, but hopefully it doesn't break. Well, guess what? When we start to make lower highs, we kind of broke maybe even this. You should exit the market, right? So first thing is, it's okay to be wrong. It's not okay to stay wrong, okay? Always have a stop loss whenever you actually trade, right? So in case price goes a certain way. The second part of that is understand where the market potentially could go. That's where drawing Fibonacci extensions, things like that, could really help you. So it gives you a visualization of where the market potentially could go. I like Fibonacci extensions. I also like Fibonacci retracements. But here's a good example of a Fibonacci retracement just from this entire leg, right? All of this price action, because this is kind of the last major leg higher. When you see the market starting to fall, you could go, okay, hey, I think we're coming down to this 200. When we get there, I'm going to look to be a buyer of maybe of certain stocks. Now, I'm looking at the Emini S&P futures. If you want, you could do this with anything. AAPL, let's take a look at Apple, right? On my weekly watch list, I'm always drawing trend lines, looking at market profile. Where is the next major support level based on prior price action, but also based on market profile, high volume nodes, low volume nodes, things like that. But if you're kind of like, hey, okay, what else can I look at? Moving averages, trend lines. Where does price land down here? Meaning, if price keeps falling and we come to the bottom of the trend line, does this match up with anything at all, right? So that trend line, and remember, we got to kind of look into the future because this is today, but by the time we get there, we might be all the way down here, okay, at this level. Well, guess what? We had a prior high, right? Resistance, kind of bounce around, support, fail, come back up. There's a low volume node. There's multiple things going on here that, hey, if we get down here to the slower trend line, I'm going to be a buyer for potentially a swing trade looking for a bounce to the upside. So there are all these different tools that we have that you can actually use, right? Prior support resistance levels, prior highs, market profile, trend lines, moving average lines, Fibonacci's. All these things kind of line up. And if you actually grab a Fibonacci extension, go from this highest peak, okay, all the way down to this low because we had nice bounce from here, are there other things that match up? Well, look at this. the 127, right? It's all about finding confluence and not stressing out. Apple is not going to zero next week. So if you're long, don't be like, oh my God, Apple's going to zero, the market's falling, we're going to war, all these things. No, good quality stocks usually don't sell off hard, and we could see that in this type of market. Now, there are other times where other markets are a little different, black swans, but this has kind of been telegraphed. We know interest rates are going up. We know that there's a potential invasion of Ukraine as I film this, right? We know all these things, but yet Apple is a good quality company. They're still selling phones. They are on top of their game. So they're not going to sell off as hard. This is just more of a pullback within a general pullback, which is somewhat of a healthy market. But I want to use these levels. Look at this, the 1618, this prior low volume node, right? Right here, the point of control on all this daily market profile is a 100% move, or flip that over, it equals the 200%, right? Lots of volume, the most volume that's traded. So there should be some support, some buying at those levels. So to kind of sum everything up, we're able to make a plan. That is what we're in control of. We have the ability to make a plan, to look at the chart and pick levels where we want to be a buyer. Now, people ask me all the time, well, you're so good at calling like reversals or tops, bottoms, things like that. And I don't try and do that. I also don't trade, hey, look, I think the market's going to roll over and try and short the market. That's not what I do. What I do is I say, hey, the market's going to roll over. As we're falling, where are levels that I could be a buyer? And people will say, well, you're missing the whole move. Okay, I get it. I'm missing the move. Who cares? I'm not trading for you, okay? I'm trading for myself in the way I see the market. And that's what you need to do. Now, you might go, hey, I see the market rolling over. Let me go to the short side, right? And maybe your target is where you take the trade off. My targets, okay, are my entry points where I think there's going to be a bounce, because that's the way I personally see the market. You have to figure out what works best for you. But as long as you have a plan and you understand what's going on in the bigger context, I think this is a bear market or sell-offs like what we're having currently is not something to be afraid of, but to embrace and look at it as a buying opportunity. So hopefully this video helps. Let me know your comments, what you guys think, anything like that, what your targets are on, let's say, S&P futures and Apple. So with that being said, thank you as always for watching my videos, and we'll talk to you soon.